more information about this particular setup and to download the template used in this video, visit us at backtothefuturetrading.com/unplugged. Hey, this is Michael with backtothefuturetrading.com as part of our ongoing NinjaTrader Unplugged series. I want to introduce you to one of the more powerful indicators included with the NinjaTrader platform for free before you ever add another third-party vendor program to your arsenal, and that's called the Fisher Transform. Fisher Transform was created by John Ehlers. Now, if you haven't done any research into John Ehlers and his work, hang on tight. John is probably one of the smartest developers we've ever encountered in terms of his scientific approach and ability to take standard conventional approaches to trading and essentially inject rocket science into them. His work in the field of indicator development, indicator filtration, and the ability to eliminate lag from standard indicators is world-renowned and quite possibly one of the best technical analysts of our generation. We'll talk about the Fisher Transform, and I'll put a link in our Unplugged folder that you'll get an opportunity to get a hold of at the end of this video, where you can do some more research on this one particular tool. Essentially what John's done is he's created an envelope. Most momentum indicators have a very distinct sort of sine wave pattern to them. If you think of a conventional MACD or an RSI, but if you look at a MACD, it's sort of unbounded, meaning it can go as high or as low as it wanted. Well, John took a look at this and created, without getting into the gory details of the math, he thought, what if we approach the indicator as more of a square wave pattern? And you'll see down below on my chart, I've got the Fisher Transform with lines at plus or minus 1. And without going into the gory details, let me hit pause and get rid of some of these drawing elements. You'll see that this is relatively simple to interpret as compared to a MACD indicator. And if I expand this out, take a look. When you see values going above the 1, or the square wave value essentially of the 1, you're waiting for the first regressing bar to the downside. So take a look. It's higher, higher value, higher value, higher value, all the way up to the peak. And then this very next candle has a lower value. Okay, same thing down below. You'll see that this decreases past this oversold bottom, and we have a lower value, lower value, lower value. And then on this very next bar, it retreats upwards. So we have a hook. So what we're going to do is we're going to look for all the places where the market comes to a threshold area and breaches it, in this case plus or minus 1, and then hooks back in the other direction. And if you look at my chart, you'll see where those signals are appearing on a standard NinjaTrader chart. Now I've just got a 120 period EMA. Everywhere you see a green arrow on my chart starting at 8 o'clock, we'll put a vertical line here at 8 o'clock. Everywhere you see a green arrow is a place where the transform indicator told us with this hook pattern, look for a potential entry or exit. And if you're like me and you're a fairly visual person, you'll see that looking at the green arrows where these hooks have occurred are very valuable entry points into the market. So the first thing that the Ehlers-Fisher Transform indicator does, which is, again, as part of our Unplugged series, this is an indicator that's included free with your NinjaTrader platform. It's putting us in some very important areas of consideration for a trade. Now, do all of them work? No, but between 8:30 and 9:30, count with me how many of them put us in serious, substantial areas of movement. You have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 signals. How many of them immediately push down or immediately push up into profit? 1, 2, 3, 4, 5, 6, 7. So 7 of those signals out of 10 immediately pushing into substantial areas of profit. One of the other potential rules-based strategies you can employ involves the idea of candle location at the time of the signal. Here's what I mean by that. once you see this pattern, it'll be pretty obvious. If the signal candle appears as the high or the low, again, here's the preceding candle. There's the lower threshold. There's the upper threshold. If the body of the signal candle is above, this low is above the prior swing low, we'll call that a potential peak extreme. And you'll see here, very similar pattern to the peak at the left. The prior swing low, or the close and open of this candle, are here and here. So do you see how the body of this candle is above the prior low of the candle above it? Next to it, rather, on the left? That is a potential extreme swing high candle. So if you only want to risk 5 ticks in a gold trade, for example, you can have this as a way to check if that's going to be a potential swing high or swing low. And if you look here on my chart, you'll see where I've drawn a blue dot at all of those places where that was a potential swing high or swing low. And if we put a rectangle next to those, take a look at this. If you adopt that one extra filter, a candle pattern filter, looking for an extreme low or an extreme high, you only have to risk 5 ticks to get 10, 15, or 20. So adopting the Fisher transform indicator, looking at the market through more of a square wave pattern with extreme movements, and then using one candle pattern as a filtration method, we can identify areas where we can incorporate a 1, a 2, or a 3-to-1 reward to risk ratio. To get this templates and to find out more information about this setup or any of the other setups in our series, you can go to our website at the following link: www.backtothefuturetrading.com/unplugged. Remember, as you use NinjaTrader for your trading needs, there's a lot of tools in here that are included for free with your package. You may not have to use a third-party indicator and find success in many of the free indicators included with your NinjaTrader package, or as we like to call it, NinjaTrader Unplugged. Thanks again.